Welcome back to the channel. A lot to unpack, a lot to talk about. Want to share our thoughts and opinions on what's happening right now with fixed rate mortgages and these bond yields as these pressures continue to mount here in Canada, and what that means for Canadians that were waiting on the sidelines for those mortgage renewals and better rates, and what could happen with the Bank of Canada now that we guaranteed almost a pause on July 30th. Want to take an opportunity to go through all that this week. Once again, thanks for stopping by. If you have not yet subscribed, please consider subscribing to the channel. All it takes is you to hit that notification bell as well as the subscribe button. Leave your thoughts, questions, and concerns in the comment section below. Most importantly, like and share the video, but let's get right into it. Ultimately, right now, what we've talked about over the last little while is that fixed rate mortgages were potentially going to move up. And as of right now, a lot of the major banks are starting to move those fixed rates up as these bond yields continue to increase here in Canada, which is creating a lot of pressure on those fixed rate mortgages, especially the 3 and the 5, as we see those move up anywhere from 5 to 10 to 15 basis points across the board. That's for conventional and insured mortgages. A lot of banks are not giving or granting those discounts. And although this may not be a major move, I mean, obviously 5 or 10 basis points, if we continue to see these pressures mount from the fact that Canada doesn't get a favorable trade deal and all these pressures that are coming through as part of these tariffs, well, we can definitely anticipate that fixed rate mortgages are not going to be moving down anytime soon. And that has obviously played into a lot of Canadians who we've talked to and that we hear sentiment of, that we're waiting for variable rate mortgages and fixed rate mortgages to sort of come down. One being obviously with fixed rate mortgages and those renewals are saying, hey, I'm not going to worry about locking in, or not going to think about getting in now because I think by the end of summer, the fixed rate mortgages are going to be, super low. And that might not be the case right now. And ultimately, looking at variable rate products, a lot of people anticipate that the Bank of Canada was going to continue to cut rates. And ultimately, as the data continues to change, the Bank of Canada's opportunity, the door for that Bank of Canada cut is literally diminishing right before our eyes. And the next time the Bank of Canada will meet is in September. So, I mean, ultimately, maybe it's too soon to tell if you have a renewal or mortgage coming up in the next little while. You may want to hit that pause button as well, as the Bank of Canada is doing. Say, hey, lock something in right now. And this is what we've been doing as a piece of advice for some of our clients, is looking at their cost, right? What that potential to either lock in with their existing lender early, right? Renew that mortgage early if it's possible. Then ultimately look at the option of getting a second opinion, moving it to a different bank, and potentially weighing out, hey, that mortgage may be only good for 90, 120 day hold. Your mortgage may not be renewing to the end of the year, but at the end of the day, you have to look at those options. Say, hey, I might pay a couple grand in penalty to get out of that mortgage early, but I'm at least secured a lower rate than the potential for rates to rise at the end of the year and then renew into a higher rate. So you always have to do this cost benefit analysis when you're looking at your mortgage situation. And that applies right across the board for Canadians that are looking to maybe get out into the market. Obviously, the real estate market continues to be the slowest it's been in, at least from my recollection, being in the industry for 15 years, that we've seen. This has ultimately probably been worse. I know that many people will say, hey, the 90s, this, that, and the other. Ultimately, we've studied it. I've read about it. Those time frames obviously had different economic drivers, different, things that were moving those markets in the 90s. Obviously, the recession, they didn't have tariffs, they didn't have all these uncertainties. They also didn't have the amount of quantitative easing back in the 90s. So, all these things, not to say, hey, today's picture is better or more bleak than it was back then. It's definitely different than it was back then. So we have to understand, hey, this real estate can take some time for things to come back alive. Ultimately, at the end of the day, I'm not saying, hey, go out there now. Look, take your time. We have a lot of clients that are seeing opportunities unfold right before their eyes. They're looking at properties that they once could not qualify for. They are now able to qualify because of income, because of down payment, but also because of those property prices on those particular pockets where those schools are located, in those municipalities where they wanted to live, have come down in price, and now they're actually obtainable. Not only are they obtainable for some, those who qualify, obviously, those who have been pre-approved, those who have the down payment and the means and the security within their jobs, but ultimately they're looking at that opportunity right now saying, hey, this is where we are right now in our journey to purchase a home. And, will this opportunity come again? Nobody knows. I mean, this is the reality of the question, right? And they always say in the industry, you sort of, you date the rate, you marry the price of the home. If you feel that the price of that home is literally much cheaper and you're happy to pay a little bit less. I mean, look, a lot of people were willing to pay a lot more for that house in the FOMO era. They just maybe couldn't qualify, or maybe they did, and they ended up regretting that decision. That's really a situation that's happened to a lot of people. But right now, those who've patiently waited can see that opportunity in front of themselves, and we're helping clients obviously every day who need to start a family. So ultimately right now, if you're banking on lower rates, just to take this full circle, I mean, you may not see those lower rates come through. And if that's what was holding you on the sidelines, well, you might have to stay on the sidelines a little bit longer if that's what you're waiting for. And ultimately, it's always best to get pre-approved, to have that opportunity that if you find the property, you're qualified and everything aligns, that you can always execute. And at least if you know you locked in a rate a little while ago, that it could be potentially the better rate going forward. And that's what we're telling clients right now that have been deciding to wait on that renewal, saying, hey, I'm not going to do that renewal pre-approval, that reconsideration, that review now. They're saying, I'm going to just wait closer to closing. Well, they lost out potentially on, some of those potentially lower rates. But that's as of today. We don't know what's going to happen tomorrow. All this can get put aside. Canada can strike a deal. We can get maybe these tariffs removed here in Canada. Highly unlikely, but I mean, ultimately that could all get washed away and things could change. Let me know your thoughts in the comment section below about what is happening right now. You think the Bank of Canada is going to cut next week? Ultimately, you think we're going to see fixed rates move up or move down? Let me know what you think in the comment section below. But until next week, thanks for stopping by, and we'll see you soon.